Welcome back to Investing Talk podcast. Today, we're focusing on an upcoming earnings report that's definitely one to watch, UP Fintech Holding. We've gathered recent reports, analyst notes, company info, really trying to give you a clear view of their Q2 2025 outlook. Our goal is to pull out the key insights, give you a shortcut to understanding what matters when those numbers actually drop. And before we jump in, if you find this analysis helpful, please do subscribe, like the video, maybe leave a comment below. Your support really helps us keep doing this.
Yeah, and if you'd like to support us even more, perhaps consider buying us a coffee. The link's below. Oh, and one more thing, if there's a company you want us to look into next time, just drop the name in the comments. We definitely look at those suggestions. Okay, let's get right into the nuts and bolts. UP Fintech Holding, the big question first, timing and what are people expecting, when's the report, and what's the consensus?
Right. The key date is August 27th, 2025. That's when they'll release the Q2 numbers, and it's before the U.S. market opens. And for those who want to hear directly from management, the earnings call follows at 8:00 a.m. Eastern Time. That's usually where you get the color commentary.
Got it. August 27th, pre-market. And the numbers. What are analysts thinking?
Well, specific revenue forecasts aren't universally published yet, but looking at recent trends, they've been in that $70 to $80 million range per quarter. So the expectation now implies, some modest year-on-year growth, probably landing somewhere in that same ballpark.
Okay, similar range for revenue. What about earnings per share, the EPS?
That's where it gets a bit more interesting. The consensus is clustering around break-even, maybe slightly positive for Q2, which is a noticeable shift, right? Because the last quarter was actually a small loss, around negative 20.01 teens per share.
So break-even or slightly positive? That suggests the market's looking for some kind of operational improvement, or at least stabilization.
Exactly. That's the baseline expectation baked into the current consensus.
Is there any unofficial whisper number floating around? The kind of thing traders talk about, maybe hinting at something better.
Yeah, it's funny you asked. There isn't like one single widely quoted whisper number, not for UP Fintech right now. But you do see some chatter on forums in trading discussions. There's a sense, maybe some optimism, that they could pull off a slight beat on that EPS number.
So maybe come in a little higher than break even.
Potentially. It's not a strong signal, more like hopeful speculation maybe. But the lean seems slightly positive in that informal talk.
Interesting. Okay, and what about the company itself? Did UP Fintech give any specific guidance for Q2 numbers or just general direction?
They've generally guided towards stable user growth, and they talk about gradually improving their net operating income. They often highlight efficiency, especially in their international business, and trying to grab more market share with global investors.
But no hard numbers for Q2 revenue or EPS.
No, that's the key thing. They didn't issue specific quantitative guidance for Q2 in their last earnings release, so we're working more off their strategic comments, rather than concrete targets from them for this quarter.
Okay, that sets the stage for the upcoming report. Now let's look back a bit. History often tells a story, right? How has UP Fintech actually performed against expectations in the past, the last 4 quarters?
Right. Context is key. Looking back, it's really been a mixed bag for them over the last year. Let's see. Q1 2025, that was a modest EPS beat. Revenue was pretty much in line. Before that, Q4 2024, that was a slight miss on EPS, though revenue held up okay. Q3 2024 was a clear beat on earnings per share. And then Q2 2024, going back a year, that was another small EPS miss, and revenue came in a little light too.
A bit up and down then. How did the stock react after these reports? What does that tell us about what investors really care about?
The reaction is where it gets really telling. It's been quite varied. After that Q1 beat this year, the stock went up about 3%, and importantly, it had those gains. The optimistic comments from management seem to help there.
Okay, so positive commentary matters.
Absolutely. Contrast that with Q4 2024. After that slight miss, the stock fell about 5%. The weak guidance and maybe more cautious commentary really seemed to weigh on it, though it did recover some ground later.
So guidance is critical.
Very critical. Then Q3 2024 with the strong beat. Shares jumped like 7% during the day. Big move. But most of those gains faded by the end of the week. Maybe profit-taking, maybe some underlying doubts lingered.
Interesting fade. And Q2 last year.
That resulted in just a small dip, maybe 2% after the slight miss. It stabilized pretty quickly.
So it seems like the outlook and management tone might actually move the stock more than just hitting or missing the numbers by a little bit.
I think that's a fair takeaway. The market seems very forward-looking with this one and sensitive to signals about future growth and profitability.
Makes sense. Beyond the headline numbers and reactions, what underlying trends and key metrics have we seen develop over these quarters? Things like user growth, margins.
Yeah, looking deeper, we've seen steady, though maybe not spectacular, account growth overall. More importantly, there's been a gradual increase in funded accounts, people actually putting money in, and also in total client equity balances. Those are good signs for future revenue potential.
Okay, so engagement seems to be building, even if slowly.
Right. Gross margins have been pretty stable, generally in the mid to high 60% range. That's quite healthy for a brokerage, actually. Profitability, as we saw with the EPS swings, has bounced around near break-in. But there has been a noticeable improvement in operating expense efficiency year over year. They seem to be managing costs better.
That efficiency gain is definitely a positive point for the long term. Okay, shifting gears slightly, what else has been going on with UP Fintech this past quarter? Any significant news, product launches, market trends that might play into these results?
They've actually been quite busy. During the quarter, they announced some key integrations, adding access to more Hong Kong and U.S. market venues. That broadens their reach for users.
Expanding access.
And they rolled out a revamped mobile app. Now, this isn't just a facelift, It's designed to boost engagement, but also, importantly, to help them cross-sell higher-margin products.
Trying to increase revenue per user.
Exactly. And on the regulatory side, which is always crucial in finance, they've been working on expanding compliance in several Asia-Pacific countries. That's vital for their international growth plans.
Makes sense. Compliance is key, especially in APAC. What about the bigger picture? Sector trends, macroeconomic stuff? How's the environment for online brokers like UP Fintech right now?
It's a mixed environment, really.
Yeah.
Sentiment towards online brokers is a bit cautious overall. We still have pretty persistent retail trading activity, which is good for baseline business. But then you've got higher market volatility, mainly from, uncertainty about interest rates globally. That can cut both ways for brokers.
More trading volume, but maybe risk aversion too.
Something like that. Plus, competition is intense. You've got the big legacy firms stepping up the digital game and a whole wave of newer fintech startups fighting for users. However, user growth in the APAC region specifically still seems pretty robust. That's a positive underlying trend for them.
But industry-wide, maybe revenue per user is moderating a bit from those pandemic highs.
Yeah, that's definitely a trend we're seeing across the board. Trading activity is normalizing, so brokers need to find other ways to grow revenue, like those higher margin products UP Fintech is pushing.
Okay, got it. So with all that as background, what are the analysts saying now, right before this report? Any recent upgrades, downgrades, shifts in sentiment?
Specific commentary right before the release has been a bit limited. Sometimes that means analysts are also in a wait-and-see mode. The general feeling seems to be cautious to neutral, mostly because of UP Fintech's relatively thin margins, plus those macro headwinds and the competitive pressure we just talked about.
So acknowledging the challenges, any positives noted?
Yeah, some analysts do point out the resilience of their user base. They seem good at holding on to customers. But there haven't been any major rating changes like big upgrades or downgrades right ahead of this release. Analysts seem to be watching that Asian market exposure closely, and whether these new products actually gain traction. Those are seen as the key things that could swing the results.
Okay, fundamentals, macro, analyst views, covered. Let's look at the market itself. What are the technicals saying? What's the stock price been doing leading up to this?
Well, the chart's been pretty uneventful lately. For the past couple of weeks, the stock's basically been trading sideways, flat. Volume has been relatively low, too. Often that suggests investors are kind of undecided, just waiting for the earnings news before making a move.
Maybe a slight upward drift, but nothing decisive.
Exactly. It feels very much like the market is holding its breath, waiting for the catalyst.
And the options market. Any clues there? What's the put-call ratio telling us? Are traders betting heavily one way or the other?
Looking at the options open interest, it's actually quite balanced between puts and calls, roughly even. We have seen a little bit of elevated call activity, which hints at some bullish speculation people may be betting on a rise.
But not an overwhelming signal?
No, definitely not.
Yeah.
There's no significant skew that screams strong conviction, either bullish or bearish. It looks more like general hedging or some cautious optimism, rather than a big directional bet being placed by the options market overall.
Okay, balanced. So, given that lack of strong directional bias, what kind of move is the options market pricing in? What's the implied volatility suggesting for the post-earnings swing?
Right. The implied volatility is telling us something. Based on the pricing of the front month at the money options, the market is implying a potential move for the stock of around plus or minus 9% after the earnings come out.
Plus or minus 9%. Okay, so traders are expecting a reasonably significant reaction, even if they aren't sure which way it will go.
Precisely. That 9% implies they anticipate the results or the guidance could be enough to cause a meaningful price swing, up or down.
All right, let's put it all together then. Expectations, history, news, market signals. What are the potential scenarios we should be thinking about for UP Fintech when this report lands? Let's start with the upsides, the bullish case.
Okay, the bullish case. Ideally, you'd want to see a clear beat on both revenue and EPS, that's the headline win. But beyond that, strong growth in those key metrics, total accounts, and especially funded accounts and client equity, that shows real platform momentum.
So not just beating numbers, but showing underlying growth.
Exactly. And then, crucially, materially higher guidance for the second half of 2025. That signals management confidence. If they can also point to real progress in new markets they've entered, or show that those new higher margin products are actually gaining traction and contributing, well, that would definitely fuel a bullish reaction.
Makes sense. Beat, grow, guide higher, and show strategic wins. Now, the flip side. What's the bearish case look like? What are the red flags?
The bearish case, well, obviously starts with a miss on EPS or revenue, or both. But just as damaging could be soft guidance. If they guide down on user growth or signal that margins are getting squeezed, that would be a major concern.
So even if they meet Q2 numbers, a weak outlook could hurt.
Absolutely. Other red flags? Signs that trading volume per user is declining, that hits revenue efficiency, or if their fixed costs are rising faster than they're adding new customers, that points to potential profitability issues down the line. And of course, any negative news on the regulatory front, or if management sounds hesitant or weak about their APAC expansion plans, that could easily trigger a bearish response.
Okay, lots of things to watch there. If you had to pick just one or two key metrics to really zero in on amidst all this noise, what would they be?
If I had to narrow it down, I'd really focus on funded account growth and client equity balances. Why? Because those metrics really signal sustained engagement and actual asset accumulation on the platform. They're probably the best leading indicators for future revenue growth and whether they can gain operating leverage. More so than just headline revenue or even EPS in a single quarter sometimes.
Funded accounts and client equity. Got it. So pulling everything together, the mixed history, the cautious analyst sentiment, the balanced options market, the potential scenarios, what's the overall leaning heading into this report? And maybe on a scale of 1 to 10, how confident are you in any particular direction?
Honestly, the overall leaning feels very neutral, right down the middle. If I had to put a number on it, a confidence score. I'd say a 5 out of 10, squarely neutral.
A 5. Why so balanced?
Well, because UP Fintech's recent performance has been such a mix, hasn't it? They've shown some good signs, like improving efficiency. But that's often been offset by those macro headwinds, the tough competition, maybe some regulatory friction. There are definitely positives, like the user growth and the app upgrades we talked about, but there aren't really any major, obvious, positive catalysts screaming buy right now, and the analyst conviction just isn't that strong either way. It feels very balanced, with significant forces pulling in both directions.
A neutral 5 out of 10. Okay, so for listeners trying to figure out how to approach this, what are some trading strategy considerations, given that neutrality and the plus minus 9% implied move?
Well, for investors who are more risk-averse, the prudent play might just be to stay on the sidelines. Wait until after the earnings report, let the volatility shake out, and then assess the situation with clearer information.
Sit it out until the dust settles. Makes sense for some. What about those with a higher risk tolerance?
For those more comfortable with risk, you could look at option strategies designed to play volatility itself rather than direction. Things like a straddle or a strangle. Given that plus minus 9% implied move and the company's history of making significant post-earnings jumps or drops, these strategies could potentially profit if the stock makes a big move, regardless of whether it's up or down.
Playing the volatility.
Right. But, and this is important, if someone is taking a directional bet, buying the stock hoping it goes up or shorting it hoping it goes down, they should absolutely use stop losses. Earnings reports can bring unexpected news, headline risk is high, so managing that downside potential is crucial for any directional play around earnings.
Good advice. Okay, that was a really thorough look at UP Fintech Holdings' upcoming earnings. We've covered the expectations, the history, the context, the market signals, and the potential outcomes. And that key takeaway seems to be focusing on that underlying health-funded accounts, client equity, perhaps even more than the headline beat or miss.
I think so. And this whole discussion about UP Fintech, it really highlights a broader theme when you're investing in fintech, especially in dynamic regions like Asia Pacific. It's not just about the quarterly numbers. You really have to consider how these companies are navigating, the shifting global regulations, the really intense competition. How are they building long-term user loyalty and finding sustainable growth paths? That's often more telling than any single earnings print.
That's a great point. So maybe the ultimate question for UP Fintech isn't just about Q2 results, but about their long-term strategic positioning. Are they building a durable business that can withstand the competitive and regulatory pressures in APAC? Or is current growth just masking bigger challenges ahead? Definitely something to mull over as you watch these results come out. Thank you for tuning in to Investing Talk Podcast. We hope this analysis of UP Fintech Holding has given you some valuable insights. Don't forget to subscribe, like, and comment with your thoughts. And hey, maybe buy us that coffee if you found this useful. And let us know if there's another company you'd like us to cover. We'll be back soon with another analysis.